Trump wants negative rates, a sign for global recession? President Donald Trump attacked the Federal Reserve recently in a bid to push down interest rates below zero. This is a move reluctantly used by other world central banks to battle weak economic growth as it punishes savers and banks' earnings in the process. Isn't this a sign for an imminent economic recession in the US? President Trump's provocative idea to reduce interest rates to below zero could have some negative effects for people who are close to, or in retirement. Negative interest rates have a non-positive effect on cash. Banks already do offer consumers a relatively low interest rate just for depositing their money into a savings account. The interest profits they incur on their savings would only be lower if the rates were lowered. Importantly, interest rates also impact bonds on how they are priced and valued. This impact, which would naturally affect retirement portfolios, and how much pensioners can withdraw money on a monthly basis. Once pensioners are not able to withdraw much money, they spend less, hence directly affecting the general US economy, causing a slowdown. On September 11, the president suggested on Twitter that the Federal Reserve should not only reduce interest rates, but bring them to below zero. He tweets, "The USA should always be paying the lowest rate. No inflation," he wrote. "It is only the naivete of Jay Powell and the Federal Reserve that doesn't allow us to do what other countries are already doing. A once-in-a-lifetime opportunity that we are missing because of boneheads." Some countries in the world, such as Europe and Japan, do maintain negative rates. They do so to stimulate the economy and boost the export industry. However, many critics highlights that bringing interest rates to zero is usually signals that a potential recession is imminent. It also would be detrimental to the US economy. Many economists say that a government note with negative rates are not valued by investors and the general public, indicating a loss in its value. The Feds are expected to slash interest rates from 2% by 0.25%. Currently, the financial markets sees an inverted yield curve, especially to the higher year bonds. This is happening because investors are concerned for a coming recession and want to lock up their liquidity in safer investment vehicles. Interest rates and bond prices have an inverse relationship, which would make bonds more expensive by cutting rates to zero or below. Indirectly, it means that investors would be paying a premium to invest in a fixed income product. Even so, investors don't mind paying the extra cost just to be earning low returns of 1 to 2%, which is still better than losing anything more of their portfolio due to the crashing markets caused by the recession. However, investors should not be distracted from equations and trends for asset allocation. Young savers still have to maintain the majority of their pension fund in shares, while elderly employees proceed to partly participate in bonds. And while longer-term securities are currently less profitable than short-term securities, the fraction of set revenue in portfolios should still needs to be diversed. However, those who have plenty of money in their portfolios may want to test other options. Especially if you're in pension saving at the start of your financial trip, cash may not be what you want to be holding. Looking at the entire global rates situation, most countries are now diving into near zero or below zero territory. Even so, majority of the people are still unaware that the global financial situation is not encouraging, as negative rates, if prolonged, has very detrimental effects on not just to the savers but to investors and the general economy. Negative rates is a clear sign that the imminent recession is round the corner, but a lot of people are still not prepared for any form of major global downturn. What do you think of negative rates in the US? If US was to dive into negative rates as wanted by President Trump, do you think US will have many economic problems that will follow, and hence leading to an unavoidable economic collapse? Please share your views and comments below. Please give this video a thumbs up and please do share it if you find it useful. Also, to explore blockchain and Bitcoin mining as alternative investments, please visit our other YouTube channel Blockchain 360.